Is NLY Capital a stock you should invest in? We are going to answer that question with this video. This is another 5-minute DD, guys. Welcome back to my channel. So today we're talking about ticker NLY. It is a very popular dividend stock that's yielding 15.5%. That pays into why it is so popular, and we're going to talk about it. First things first, if you guys could like the video, and if you're interested in this type of content, subscribe. It helps me out a ton, and I do about 4 videos a week, all on this kind of subject matter. So that would help me out if you guys are interested, and you can always leave a comment on a stock you want me to do a 5-minute DD on. I love doing this. I jump in, do some research on a company. I find out what I would want to know before I was to purchase, and then I put it into a video for you guys. So I hope you enjoy. Let's jump into the pros of NLY Capital Management. So that dividend yield is probably the biggest pro for this company, a 15.5% dividend yield, which is absolutely remarkable. Another bonus is that they do pay special dividends. Now we're going to jump over into their dividend history really quick, and we'll talk about this. So we can see that they paid a special dividend in 2018 and 2016. So they don't pay them out it's not extremely common, but they have done it a couple of times, which I like to see. A lot of stocks that I own have never paid out a special dividend. So it is nice that the company was profitable in those times and was able to put out a special dividend. Now, jumping into their recent stock split, this is a big deal. I like when companies do stock splits because typically it opens it up to more hedge funds. They purchase either a smaller position because they can buy more shares for a lower cost. And whenever you're talking about dividends, I usually like being able to purchase more shares just because I like being able to track it. It's nice to be able to purchase a certain amount of shares for, let's say, $22 instead of buying one share for $100 or $120. So I like that. That's kind of a personal thing. I wouldn't necessarily say it's great for the stock. It all depends on the situation. And of course, I recommend you guys do your own DD on these stocks as well. Look into it further, learn how to do the research because it's super helpful when you're looking into buying a stock. There's been a number of stocks when I thought, oh, I'll buy this right away. I did some research on it, found some stuff that I really didn't like, and all of that came out of me just knowing what to look for when you are doing due diligence on a stock. So the last pro on the list is that they are rated really high on tip ranks. It's about an 8 out of 10, which is really good. Now, for those that know tip ranks and use it, I use it quite a bit, but I don't love their rating system, and I'm not sure. It doesn't really even explain why they have them rated so high, but they do. So I'll be honest, NLY is not a stock that I own, and it's not one that I'm considering buying at this point for a number of reasons. That's why the con section on this one is so large. But I wanted to talk about this because I noticed a lot of people are hyping this stock up, and it's just, there's a lot of red flags in my opinion, and I want to address those and be honest as to why I'm not buying this stock. I'm not saying you shouldn't buy it. I always think people should make their own choices. Follow your heart, more so follow your due diligence on a stock. If you find things you like about it, that is great. So let's actually jump into this chart is pulled from their website, from their investor presentation. All of this is on here. It's public information for those that don't know that. You can pull up any company's information and check this all out yourself. I highly recommend doing that. Doing this has really changed how I research stocks. Before, I would look up, different forums on stocks. I would use Twitter and Reddit and the Yahoo forums even. So looking up this stuff on your own is really useful for learning how to read it, because as you can see, this is interesting. I don't have a finance degree, so learning all of this stuff did take me some time, but it's not as hard as you would think. So there's a number of things that caught my eye right off the bat as we're looking at this chart. Cash and cash equivalents. So they actually went up. The right side is 2021, and they've gone up to the left is 2022. So they started with about 1 million in cash and cash equivalents, and actually went up to about 1.4 million in cash equivalents in 2022. It is pretty interesting. The securities stayed about the same. The loans dropped quite a bit. So they were at 3.5 million, and now they're at 1.5. Mortgage servicing rights, they increased from about 600,000 to 1.7. So a lot of numbers have been changing drastically for this company. But the total thing that I wanted to look at is their total assets down here at the bottom, where they have it all calculated out for you. I don't necessarily care too much into what shifts between the types of loans that they're doing. There are some that are better and some that are worse, but the key factor with this is their total assets has increased from September 30 to September 30 from 2021 to 2022. It was 76 million, and now it is 85.4 million, which is an impressive jump until you look into their liabilities. Now, this is where I think a lot of people get confused where they say, oh, look at the total assets, it's gone up. That's amazing. They have more money. They must be doing well. And while that is true that they do have more money, their liabilities have also increased by a significant portion. And I say significant because it is actually more increased than their total assets. So we're looking at their total liabilities in September of 2021. They had 62.9 million in liabilities, and now it's at 74.5 million. So they have gone up about 12.5 million in total liabilities while only increasing, let's see, about 9 million in total assets. So that is definitely a red flag in my opinion. Their liabilities are increasing more so than their assets. I don't like to see that. Their price to book value is also another one that you should look up. That one is very important. And then we see total stockholders equity down here, which was let's see, 13.7 million. It's hard to read that, I know, to about 10.8. So it has gone down as well. A lot of things have been tracing down for this company. And now let's jump into the long-term stock chart. So I know that was kind of confusing. I recommend, I'll link this down below. You can go check out their website and see all of this for yourself. It's hard to blow it up because there's so much little information crammed on there. But their long-term stock history, so they've been doing better the past couple of months. The last month they're up 5%, still down about 9% the past 6 months. And if we go to the 1 year, down 28.25%. A really bad month in September, as most of the market had. 5-year chart is ugly. This right immediately is what kind of ruled me out from NLY when I was looking at it initially, because they are down 50% the last 5 years. Now, I know we've had a really bad couple of years, and this is not immune to that. Dividend stocks are still going to drop when the market is a bear market like we have seen, but it's hard to find another dividend paying stock that has dropped this much. And what scares me the most about NLY Capital is that they were on a downward trend before the pandemic. So they dropped about 25% and had a run right before the pandemic and then dropped off pretty heavily down to $16 a share. Now, they did run back up, as most things did after the pandemic, up about 61%. So there is potential to run, but since that point, we can see they're down another 40%. Now, what hurts even more than the 5-year chart is their max chart, down 55, basically down 56%. All time. Now, I hate buying stocks that are down 56% all time because you have nothing to go off of other than the history of the stock, and it's not always indicative of what the future holds for a stock. But the fact that this is trading lower than it was in 1998 is terrifying to me. You can invest in something, if you invested in other companies, even larger tech companies that don't pay dividends, it's still remarkable. Now, the bonus to this is that you are getting that dividend income, but you have to equate that to what you're losing in the price of the stock. So you can keep getting more and more shares, buying more and more shares at lower value. If the stock price continues to fall, what is the point? You will not be making money. Whereas you could have put that money into like SCHD or into SPY, and over the past 10 years with SPY, you would see a much better outcome with a smaller dividend yield, of course. But still, it is really scary. And then another thing is the dividend history. So I'm actually going to pull up their full dividend history. We can see that this, because they did the reverse split, the dividend is a little bit wonky, trading at about 88 cents a share the past 2 dividend payouts. Before that, it was 22, but that equates to 88 total because of that split. But we can see before then, they cut their dividend first 2018, then they cut it again in 2019 from 30 cents to 25, and then again in 2020 from 25 cents to 22 cents. So it definitely has a history of bad dividend cuts, which I don't like. And every time they cut that dividend, it just shows that the companies that are doing really well don't cut their dividends. I'll just say it that much. That's a very easy way to look at a company's history. Sometimes, with like AT&T, they did some restructuring and they needed to cut the dividend, but still, it is scary to see that. And if we jump over to tip ranks, we can actually look at their dividend amount per share. So yes, they cut it from, it was $1, trading at about 19% yield in March of 2022, and since cut it, now we're at 88 cents, and it's traded for 88 cents for quite a while. But still, it's just scary to see those cuts, especially if you're depending on this for income. Say you're retired, that would be terrifying to me. I need to move along. I'm going way too slow. So the dividend history, the dividend growth is negative. So that is definitely not what you like to see. So that wraps up the video. I personally would not buy NLY Capital. I'm not giving out financial advice, guys. Make your own decisions and do your own research. These are just my thoughts when it comes to this company. If you guys could like the video, that helps me out a ton. I hope you guys found something useful from the video. And if you own NLY Capital, you know, even if you do like it, reassess, see what you like about it, do your own due diligence, make your own decisions. I trust you guys. I think everyone will make money in the long run, hopefully. So let me know in the comments if you want me to do a video on one of the stocks you own or a stock that you're interested in. I'm happy to do that. And go check out my content for more information. Thank you guys. Hope you had a good day in the market.